Hello, investors! Merry Christmas! Ho, ho, ho!
That's right. It is Friday, December 23rd. Nice assist from my granddaughters there. And it's the big show, the Friday edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at next week, and update the world famous 21 over 21 leaders list. Let's get right into it. State of the market. We are in a correction. You can see over here in the trend gauge. Leaders held up okay this week. They're still at neutral with a red sub arrow. Short term, all 5 of the moving averages of the major indexes are below their declining 21-day exponential moving average. That's what we really need to see improvement on in order to get any confidence in this market. Medium term, we're mixed versus the 50-day moving average. In most cases, the slope of the line is still going higher. Uh, One, maybe 2 indexes are above the 50. We'll take a look here in a moment. Long term, 4 of the 5 below their 200-day moving average, the Dow holding up the best. So what happened today? We've been talking all week about the Santa Claus rally. Technically, this would be day 1. The true definition of Santa Claus rally as defined by the Trader's Almanac is the 5 trading days prior to the end of the year and the first 2 trading days of the following year. So this would have been rally day 1 with the market being closed on the 26th. Sometimes day 1 is after Christmas, but with Christmas falling on a Sunday, you fall back to the Friday. And we did get a rally today. We had some news pre-market that caused some volatility. We had volatility the open 30 minutes, but for the most part, there was an upward bias most of the day. Here are the numbers. G6, barely positive on the day. S&P 500, and this is really because ARK can't get out of its own way because of its large holding in Tesla. Tesla down another 1.8% on the day. S&P 500 gap down 0.25%, ended up positive 0.59%. Nasdaq 100 up 0.2. Dow up 0.5%. Midcaps up 0.73. Russell up 0.4. Global diversified 60/40 stock and bond up 0.19%. The weakness was in bonds today. GROTECTION positive on the day 0.03%. Now for the week, G6 down 1.68%, led to the downside by ARK down almost 7%. S&P negative on the week, down 0.2%. Nasdaq 100 was the loser of the big indexes, down 2.5. Again, those big FANG stocks cannot get out of their own way. Dow, the leader on the week, up 0.86. Midcaps up 0.8. Russell just barely positive. Global diversified 60/40 again weak due to bonds down 0.6 on the week. In-house GROTECTION, we were up 0.32%. We'll go through the tail of the tape and the updated 21 over 21 leaders list. Let's get into what we do here at Revere and why we do it. We are an SEC registered investment advisor. We manage separate accounts. We're not a hedge fund. We're not a mutual fund. We're a money manager for separate accounts. Trades are done at a block level, so everybody gets the exact same price whenever we make a trade. If the markets are trending above their short-term 21-day, that's the green line. Medium-term 50-day, that's the red line. Long-term 200-day, that's the black line. We are as committed to the market as we can comfortably be. If we start to fall below those lines and the slopes of the line start to roll over, our stops will take us out of the market. And if we break below the black line, we're at maximum defensive posture because of this chart right here. This is the last 13 bear markets. All of these losses, whether it's just a run-of-the-mill 20% like we had in Q4 2018 or a vicious multi-year sell-off like we had with the financial crisis down 58%, all of these occur under the 200-day moving average. On average, you break the high to the first break of the 200-day moving average is 12%. It's what happens underneath there that we're concerned about and what we get out of the way to avoid. And following our rules this year served us very well relative to the indexes. So if you're interested in this approach, Reach out to me, Don at RevereAsset.com, or my partner, Dan Stewart, Dan at RevereAsset.com, or call 855 Real Wealth. That's 855-732-5932. So here is, let's look at a 15-minute chart of the S&P 500. We now have had 1, 2, 3, 4 of the last 5 days where we undercut 3,800 and got back above it. So a very clear line in the sand. The market has decided at 3,800. We're Be aware, the longer you knock on a support level, if you're not pulling away from it, the weaker it gets. But for now, it's just a brick wall. 4 out of the last 5 days, like I said, undercut and reversal, and that was the case again today. Volatile 30 minutes. Let's take a look at a 5-minute chart here. Volatile first 30 minutes where we undercut, reclaimed, rallied up. 10 o'clock, we got some good news on consumer sentiment. That kicked off the rally. The requisite pullback after a strong rally, and then really just choppy base sideways action closed near the high of the day. So decent upward bias for day one of the Santa Claus rally. We'll give it to the bulls. NASDAQ 100, still the weakest of the indexes inside day versus yesterday, which means yesterday's high and low were above and below today's high and low. That means it's a little bit of digestion going on. You can see by stochastics, this is the weakest of the indexes, as well as the relative strength line and the slopes of the moving average, uh, as well as how far we are below those moving averages. So from the weakest to the strongest, let's go to the Dow. We took a position in the Dow today on the undercut and reclaim of the 50-day moving average. And the 3,800 level on the S&P 500. The plan was to get back in here. We're getting back in above where we sold a week and a half or 2 weeks ago. So anytime I can re-enter at a low risk entry and re-enter lower than where I did before, I'm going to take advantage of that, and that's what we did. Also note, we yesterday we did not undercut the lows of late last week and early this week on the Dow, and that's just showing more relative strength. If you look at the last 7, 8 trading days, very clearly on a relative basis, the Dow has been the leader. The relative strength line at new highs, price nowhere near, well, not nowhere near, but not near new highs. This was the rally up where we lagged. This was the big reversal. So that's the high end price far below there, but on a relative basis, we're back where we were when we were still leading and had this big move up uh, that topped on a relative basis at 11.9. So here we are 6 weeks later, revisiting those relative highs. Let's go to mid caps now. Um, Mid caps outside day today, so above yesterday's high, showed some relative strength. All 4 moving averages coming together here. Something's going to give at some point. We're going to move up into it and go lower, or we're going to break through it. I don't know what the catalyst would be to make us break through it. We don't argue with price. 450 looking very strong as resistance, and that coincides with the moving averages. So uh, technically, by the book in a bear market, into 450 would be a place to short mid caps. IWM, uh, note how much more spread apart the averages are. 180 appears to be the line in the sand there. That would be the resistance on the upside if we would rally. Again, relative weakness. 5 of the last 6 weeks, a little bit of relative strength today. We did get a stochastic cross up, so that gives us a little bit of momentum going higher. But again, until we get some good news across the board, uh, into resistance is you should be thinking about selling, not buying, and definitely not selling strength. Isolate the strongest, buy them on a pullback, so that if that bottom of the range doesn't hold, your stop is very close, as opposed to buying a breakout, which then fails. And then you might get stopped out or go all the way down to the bottom of the range, bounce, and you're wishing you were still in when really the problem was that the entry was a problem. And that's really my biggest takeaway from this year, is being steadfast in a bear market that you cannot buy strength. You can isolate the strongest on weakness and buy them at support, with the intention of not holding them long term as you would in a bull market when you're trying to squeeze as much as you can out of a leading stock. The intention is to sell them into strength or at the first sign of weakness near the top of the range. So that's the five major indexes. Let's take a look at what did the VIX do. Market strong, VIX down, very strong today, down 4.6%, back below the declining 21-day moving average, approaching that big support level at 20. That support level means the VIX bounces. That generally means the market goes lower when the VIX bounces. So uh, very clearly. And note the spikes on the VIX twice over the last 2 weeks came right into the declining 50-day moving average and then reversed. Those also coincided with reversals to the upside in the S&P 500. Let's go to the dollar index, UUP. Uh, Not too much going on today, real tight range. In fact, it's been trading right around this 28 level for 2 full weeks now, trapped below the moving averages, can't get above even the short-term declining 80 MA. That's also, and remember, these trends don't persist forever. They persist, but at some point, this is going to break above the 80 MA. Dollar hasn't seemed to have had the impact on stocks as far as the stocks doing the complete opposite of what the dollar's doing. It doesn't seem to have the pull that it had prior to the last CPI report, when stocks became decoupled from worrying about inflation as much as they were and worried more about a recession next year. Let's take a look at a broad bond index, BND, down today. That means rates were higher. So here's what we've seen now is a break below the 21. While the 21 flattens out, we rallied into it, failed, and made a lower move. This coincides with the higher for longer motto of the Fed, which they put their stamp emphatically on last Wednesday with the FOMC. The TLT was the leader to the downside today. 21 has rolled over now. So now we watch the 8 and the 21 for the trend. It comes into the 50-day moving average. Stochastics approaching oversold. That means that you're going to see the TNX and the TYX higher. Here's the 10-year. Four closes above the 21 now, coming into the declining 50, approaching overbought, and the TYX 30-year forecloses above also. Really the exact same setup on the 10-year as the 30-year. The bottom line is that they're taking the Q, the higher from longer Q from the Fed, and this started last week. Really, it started this week. We stopped going down last week with the Fed, and then this week we're like, yeah, looks like they're going higher. And a gap up on Monday, gap up on Tuesday, consolidation, another gap up today. Let's take a look at the precious metals now. GLD, dollar didn't do much, gold didn't do much today either. Holding this 200-day moving average now, pulling back. It's tight. About middle of the range. If you're looking at the moving averages, we have been playing ping pong around back and forth among this 200, but riding the 21 higher. So a break of the 21 would be a change in character there. Let's look at silver. Same situation. This is really riding the 8 higher, one close below the 8 before the gap up. On Tuesday, pullback, still riding the 8 higher. GDX, we're long NUGT, which is 2 times the GDX. We got stopped on half of it yesterday. Nice bounce today, but still into the declining 200-day moving average. Can't get above it. Playing ping pong around the 21-day moving average. So this could go either way. We're down to a 1% position in NUGT. So those are the major indexes. Now let's take a look at the tail of the tape, and then we'll get into the 21 over 21 list. So a couple changes on the stochastics, just the S&P and the NASDAQ stochastic pointing down. And again, that is taking the cue from the heavy weighting of tech stocks, particularly the FANG stocks, that are pointing these lower. The Dow, small and mid cap stochastic has turned up. G6 is mixed. The NASI RSI is approaching oversold, still pointing down. Dollar under the 21 and oversold. The 30-year and the 10-year above their 21 and trending higher. Put call at 1.01 is neutral. VIX at 20.87 is on the low side into a support level. As I mentioned, fear and greed out of 39, that's fear. 12, 14 to 16, the FOMC rally killer 3-day period got us off the bull case and back onto the bear case. The news, PCE inflation data was mixed this morning. The headline number above expectations, the core number below expectations. The futures initially dropped, then spiked, then dropped again. We're all over the place. November durable goods also came out. They were down 2.1% versus down 1% expectation. So this is pointing toward a recession. However, at 10 a.m., consumer sentiment was above expectations, and that's really what kicked off the opening volatile 30 minutes. This sent it into an upward bias that we held for the rest of the day. Day count, we went from 1 down to 1 up. Expectations neutral, below all moving averages, but that 3,800 is a rock. And I was wondering if today would be Santa Rally day one, and it appeared to be, with that, again, 3,800 undercut and reclaim, which is the support level for the S&P. NASDAQ, a new support level of 259. After failing at 270 yesterday, we traded between support and resistance all day long. Volatile open 30 minutes, as I mentioned, then the move up, move down, higher high, pullback that held 5-hour base into the close. Strength today. Bond yields up because the price, BP dollar means price down, BPY percent means yield percentage up. Oil's led today, 11 out of 11 spider sectors up, so it was a broad rally. Retail continued to be strong. Weak today, solar, home builders, and biotech, some things that started out weak but gathered strength as the day went along, were healthcare and tech. Here's our focus list. That's what we own. We'll also then update the 21 over 21. So what did we do today with the undercut and the reclaim of that 3,800 area? We got rid of our short. Just we're not going lower for now is the story the market is telling us. With that, again, undercut and reclaim. So we booked our last bit of profit on that. And then we bought UDOW periodically throughout the day using the stochastic. So that took our exposure from 0.09 to 0.2, or 20% of the risk of the S&P 500. Bottom line, 4 out of the 5 last days, we've undercut and reclaimed the 3,800. I sound like a broken record at this point. Santa Claus rally day one. We'll have to see next week if days 2, 3, 4, and 5 follow suit. The market will be closed Monday since Christmas falls on a Sunday. Here's your support and resistance levels. Nothing has changed there since yesterday. So first, let's get into everything that we own. Actually, everything that we own will be included in the 21 over 21 list. So let's talk about what got booted off of the 21 over 21 list. And what new stocks got added. So, and what we own is, if it's flagged, we own it. So let's kick off with what didn't make the cut. Celsius, still love it. Staying very close to coming back on. It's got the fundamentals. The market's not cooperating. It is coming into oversold, so it might be setting up for a bounce. Tight action between 100 and the now declining 21-day moving average. So Celsius came off. Home Depot, with the builder theme that they've been acting well in this gap up, but a pretty strong reversal, and now 5 days below the 21, and the 21 has rolled over also, so that came off. The big Micron, terrible earnings report that hit all semiconductors on Thursday, took NVIDIA and off the 21 over 21 list, and also KLAC off the 21 over 21 list. You can see their action there. Now let's take a look at the 4 that were added back. Some of them former entries in the 21 over 21 that took a break. Whenever I take something off, I put it in a separate watch list and watch it constantly to see how things that are falling off, do they continue to fall, or do they, in a lot of cases, they do what Schwab did. They find support at the 50-day moving average, then relative strength kicks back in and they get back above the 21. And that's exactly what you're seeing here with Schwab, relative strength supporting this move up to this price move back above 21. Crocs also added. Nice tight pullback. This really has trended nicely or consolidated nicely. Hasn't really gone anywhere, but that's the case with all stocks. So what you do is don't buy strength. Look at them for where they pull back. If it moves off of a support area, in this case, right off the 21, that would be an entry, but you're not going to get a whole lot out of it. In this case, I would expect that recent high of 104.23 to be resistance. So if you bought it coming off the 21, you might be able to squeeze out 10%, and that's about the max that I've been seeing on gainers that are typical quote unquote can slim type stocks. Caterpillar, another one, back on the list. Caterpillar, though, with the failed breakout today or on Wednesday above that 240 level, pulled back hard but bounced right at the 21. So again, your entry, you don't want to be buying it at 240, but buying it at that bounce off the 21 down around 232 and see what happens when it gets back up to 240. Maybe you can squeeze a little bit more out of it, but the place to buy again is the strongest. And you know this is strong because look at the relative strength line over the last 2 weeks. Buy the strongest, but buy them on weakness. Halliburton is the fourth one that was added. This is another one that got weak, got booted off. But oil services, look the relative strength in this again over the last 2.5 weeks. Oil services, the best of the oil stocks, and I guess that's related to the capex spending across the board that the big oil companies are slated to do in 2023. Oil itself hasn't been acting that well, although it has bounced strongly in the last week, and oil stocks following suit. Nice bounce off the 50-day moving average and back above the 21. Nugget, GDX was on this. We own Nugget. GDX is also in this list a little bit further down. So those are the four that were added. One semiconductor stock that really didn't fall apart is Broadcom. It pulled back after this earnings move up, pulled back, bounced at the 21, nice move up on Wednesday, and then in two inside days on Thursday and Friday, while other semiconductor stocks were getting taken apart. ABGO just not affected to the manner that those other stocks were. Yum China undercut and reclaim today. Lennar, you could also have DHI or Toll on here. I picked Lennar. They're just riding the 21 higher. MDGL, this is that big approval uh, this week and the big move, 268% move in one day, gapped up, went from 200 to 300. It's pulling back now. We'll see how that acts when the ADMA comes into play. NVO just continues to ride the ADMA higher. Smartsheet, one of the few software stocks that looks decent, pulling back to the 21. Shift4 Payments, riding the ADMA higher, one of the few payment processing stocks that looks really good. NVIDIA was punted off here. They're having problems updating these lists. I've taken it off here several times. It keeps coming back on. UTHR continues to ride the 21 higher. Home Depot was taken off. GDX is in here, but we own NUGT. TMDX, two closes below the 21, bounced at the 50. Did it intra-week, so it didn't come off the list, and by the end of the week, back above the 21. ELF, really like the way this is acting. There is such a thing as being too tight for too long, and then it rolls over and needs to build a base. But for now, every time it touches the 21, it regains it. Inverse ARC ETF continues to just work its way higher. Inverse um, financials holding the 21 really didn't go anywhere this week, taking a little bit of a break after that big move down on 12.13 when all the financials seemed to have this weird shakeout moment. KLAC also was punted off. 5. We got stopped out of this, but reclaimed the 21 today as retail had a good day and really a good week after the Nike news. Celsius, we punted that one. Boeing, still holding this in the portfolio, riding the 21 higher. We took offensive profits when it got more than 2 ATR extended above the 21 on Wednesday. It pulled back, still hasn't touched the 21. Relative strength wise, it's acting great. Mobileye still holding this. Real tight action here above the 21, consolidating along the 8 EMA, and finally Scorpio. Never corrected along with the other oil stocks. This is really a testament to what's going on over in Europe and the need for nat gas to be shipped over there. Pulled back and held the 21. And that's your updated 21 over 21 list. And that is going to wrap it for this week. Want to wish everybody out there a Merry Christmas and thank my precious, sweet granddaughters for helping me with the open. They really do put a smile on my face every day. And that's going to wrap it. Remember, it's not how much you make in the market, it's how much you keep. And keep your losses small. Got in this market, you got to take profits when you have them, when they're extended or at the top of a range. Buy weakness. That's really been the ticket to stay ahead of the bear market. Everything I bought strength on, I, for the most part, ended up getting stopped out on. So, wrapping up the week ending 12/23, this is Don Vandenbord telling it like it is. Thanks for listening and have a great long weekend, everybody. Take care.